Very warm good evening to all our viewers. I am Rajendra Kumar, Central Council Member and Chairman of GST and Indirect Taxes Committee. On behalf of myself, on behalf of all the members of our committee, I warmly welcome each and every one of you for this third webcast in the GST series of our committee. I am confident that all of you, your family members, and all your near and dear and loved ones are extremely safe, healthy, and are in high spirits. All our sincere prayers are there for your well-being as always. Very esteemed friends, the first GST webcast was on the principles and scope of supply. The second webcast was on nature and place of supply. And today we are going to discuss on the input tax credit. In fact, input tax credit is the fulcrum of the entire GST. Section 16, Section 17 contain various provisions with respect to input tax credit. As they say, sweet 16. Likewise, ITC is also and will always be sweet because it is in Section 16 of the CGST Act. To explain the provisions today, we have the Honorable Vice Chairman of the GST and Indirect Taxes Committee, CA Sushil Kumarji Goyal. In fact, he is a Central Council member, and in the immediately preceding year, that is 2019-20, he was the Chairman of the GST and Indirect Taxes Committee. And in the previous tenure of the Council for the 3 years, he held this position as the Vice Chairman. In fact, when he was the Vice Chairman of this committee, GST was launched by the Government of India, as all of you are aware, on July 1, 2017. In this context, he has enormous experience in the implementation era of the GST and has been very, very closely connected with all the government officials, be it the state government or the central government, and also all limbs of the GST implementation, the CBIC, the GSTN, as well as the GST Council. CA Sushil Kumar Goyal, prior to entering the Central Council, was Regional Council member of the Eastern India Regional Council, and in the year 2011 and 12, he held the post of the prestigious post of the Chairman of the Eastern India Regional Council. A person who is, I can say, intellectual, I can call him in that way, intellectual, who has written enormous articles, contributed enormous articles on GST, contributed enormous, in fact, his famous tips that he sends to members, more than 3,000 tips that he has sent on GST is very, very popular across the country. Those are short notes which he keeps sending that keeps the members' minds ignited in this consumption taxes subject. CA Sushil Kumar Goyal is a well-read person, well-traveled person. In the previous year he had traveled to Belgium to attend the first ever World Open Conference on Classification and brings with him a wide range of international experience and exposure. CA Sushil Kumar Goyal hails from Kolkata and he in fact comes from the town of Tinsukia, where he pursued his article and CA training. It is my proud pleasure to introduce CA Sushil Kumarji Goyal to all of you, and he will deliberate on the input tax credit aspects and will also post his presentation, take questions from all of you. Thank you very much. Over to the Speaker of the Day and the Vice Chairman of the GST and Indirect Taxes Committee, CA Sushil Kumarji Goyal. Thank you very much. Yes. ये सुशील कुमार जी गोयल की लाइन नहीं मिल रही है क्या?
Thank you, Chairman. Thank you.
Thank you.
Thank
Welcome,
you
sir.
very much for nice word you have spoken about me. I don't know whether I will able to prove you right, but I will do my best to prove you correct. You are very friendly persons and very down to earth chairman of Indirect Tax Committee. I am thankful to him for giving me this opportunity. During his chairmanship, this GST ITC committee will reach newer height. We are going to have almost 100 desks, we can say help centers across the country where chartered accountant is solving your queries. Research work is also going on GST committee, and this is one of the initiative of GST committee, this webcast series. Today is the third day in the webcast series, input tax credit. Friends, I can say input tax credit is the backbone of the entire GST. Without the concept of input tax credit, without the provision of input tax credit, GST cannot be considered as complete. Let me begin with the today's topic. GST, which is worldwide known as value-added tax, and let me understand very basic of the value-added tax concept. Suppose one person purchased goods for 100 rupees and paid the taxes 10 rupees at the rate of 10%, and he is selling the product, same product for 150 rupees and charging tax at the rate of 10%, that is 15 rupees. So government liability towards him is 15 rupees, and he collected from customer also 15 rupees. But now how much he has to deposit? That is the question. So as per the value-added tax provisions, as per the input tax credit provision in GST, he can reduce the liability by taking credit of 10 rupees and he is liable to pay only 5 rupees. So this is the basic of input tax credit in GST, or you can say of value-added tax. Now come to the principles of tax credit. Tax credit is available only to the person who is eligible. Who is eligible? A person who is registered. A taxable person who is taken registration is only eligible for credit. As in the earlier regime of indirect taxes, credit was available even if you are not registered. People used to take the liable to pay net tax liability after adjusting the credit whatever available to him. But in this GST, if you are registered, then only you are eligible for the credit. Now coming to the credit available. If you have procured certain goods, not only it will be available to you, you must be satisfied the conditions, you must satisfy the requisitions in the law, then only this credit will be available to you. Once credit is available to you, you have to avail the credit also. Unless until you avail the credit, it is not becoming your right. Whatever coming to you as credit, you have to avail that, you have to file your documents, then only government will consider it as a credit which is availed by you and they will credit your credit ledger. Credit availed, you have to prove test of disallowance also. There are number of conditions we will discuss in today's webcast, through which credit has to pass on, then only it can be considered as test of disallowance has been passed. Then utilization of credit. After that, one person is eligible to utilize the credit against the liability which he has against the GST. Now some important definitions in input tax credit. First is what is input? Goods used or intend to be used other than capital goods is known as inputs. All goods other than capital goods which is used or intend to be used by a supplier in the course of furtherance of business is considered as input. Now coming to input services, any service used or intend to be used by a supplier is considered as input service. Now coming to the definition of capital goods, the value of which is capitalized in the books of accounts of the supplier and are intend to use or used or intend to be used are considered as capital. Now coming to the definition of input tax, because the topic is section 2, subsection 62. In relation to registered person means central tax, state tax, integrated tax or union territory tax charged on any supply of both. So any of four component of tax charged on this are considered as input tax. It also includes taxes paid on import of goods and taxes paid under reverse charge, GST section 5.3 or section 5.4 or UTGST section 7.3 or does not include taxes paid under composition. Now friends, the basic sections which provide input tax credit elaborately, or we can say there are 6 sections deals with the input tax, section 19, 20 and 21. So today our discussion will be in and around section 16, 17 and 18. Section 19 we are not going to touch upon. These are the job worker, and section 20 which is related to 20 and 21 related to the input service distribution. So coming back to section 16.1 which is the main section which deals the entire input tax credit in the GST. There this definition is provided under section 16.1. The few keywords which is getting my attention right now is the every person. As I spoke all of you to in the beginning, that unless until you are not entitled to input tax credit. So a registered person only will be entitled to get the credit. He can take the credit only when it is used or intend to be used for rather in the course of furtherance of his business. So we must keep in mind he can take the credit and must be used or intend to be used to him. His business means the credit will come to him or he must use for his business. Now moving to the conditions which are attached to input tax credit, and friends, we will try to deal in detail. Largely these conditions are prescribed under section 16.2 and we are starting with section 16.2a, and friends, I will look for your attention here because it is a e-mode of communications where I cannot see you, although you can see me on the screen, but I cannot feel your reactions, so you have to be little bit more attentive. So what section 16.2 talks about, no registered person shall be entitled to the credit of any input tax in respect of any supply to him unless he is in possession of a tax invoice or a debit note. Friends, the word used here, he must be in possession of, means if the invoice has been issued on 31st of March and it is lying in Delhi and you are not in a possession of the invoice, so it will not be considered an invoice. you are not complying with the first condition, that the invoice must be in possession issued by the supplier. And friends, let me remind all of you, invoice can be issued in two formats. One is the physical format and another is the electronic format. Physical format means must having original signature of the person authorized to issue the invoice. If you are having Xerox copy, email copy, faxed copy, it will not work. The original copy of the invoice is required for the taking the invoice at credit. Now coming to the second type of invoice, these invoices are electronic invoice. Friends, the number of things which is we have to take care when we talk about the electronic invoice, because electronic invoice must be digital signatures and must be kept in e-format. I have not seen so far any software through which you can store these invoices, because if you are storing these invoices in printed form after taking print out of the same, it will not be considered as the invoice. E-invoice must be stored in electronic form and must be readily available to the user, because e-invoice can be verified whether it is correct invoice or not through digital signature that is available on the digital mode only. So next condition, we have talked that it must be in a possession of documents. And what are the documents which are considered for availment of input tax credit? First is the invoice issued under section 31. Any supply, there is something left out or supplementary, these are known as debit notes issued by the suppliers under section 34. And bill of entry, in case of imports, we have bill of entry. We can take credit on the basis of bill of entries. Invoices for reverse charge. Friends, in case of reverse charge, the person who is supplying the service, he must issue an invoice. And he is not issuing the invoice, he is unregistered person, then the person who is receiving the services or goods in reverse charge, he has to do a self-invoicing. So on the basis of that invoice also, you can take the credit, and documents issued by input service distributor. So these are the things which allow you to take the credit. Friends, now document issued should contain minimum informations. Earlier it was said that all the information letter government has introduced one provision to this section, and now they are saying and place of supply. So these are the basic conditions must contain in the documents on the basis of which you want. Section 16.2b. Section 16.2b talks about a condition that he has received the goods or services. Friends, the person who want to take the credit, he must have received the goods or services before he want to take the credit. Unless until goods or services are received, credit will not be allowed to him. But there are situations when he may direct these goods to be delivered to some other person, maybe his agent, or he has sold out the goods during the transit only to some third parties. So I should not use the word third party here, because law use the third party for the person who is the receiver of the first supply. So to somebody else in some other state. Then these restrictions will be considered complied if goods received by the third party, third person or the agent. Similar situation is also now allowed for the services, where services are provided by the supplier to any person on the direction of and on account of such registered persons. So means, let me elaborate this. Before this, I want to say there are three types of situations which we understood for receipt of goods or services. First and foremost is the general conditions, means the goods or services received by the recipient of the supply. Second condition is that we understood the receipt, if goods or services are coming in installments, then on receipt of last installment only, this person will become eligible to take the credit. Suppose if goods are coming in 5 vehicles or goods are coming in 5 installments, then on receipt of last lot only we will become eligible to take the credit. I am not going to discuss how the movement will take place for when goods are transported in 5 vehicles, but on receiving of the last lot of goods or services, it is applicable for both. We will get the credit. Friends, now question arises and nobody has answered so far. If you have purchased an insurance policy for 1 year, you are receiving the services in an installment only, because on daily basis you are receiving the services of the insurance company. Or let me take the example of annual maintenance contract. The person is visiting your premises every week and doing the maintenance work, and you have paid in advance for the entire year. Friends, as per this condition of law, you can take the credit only after receiving the last service. So we must keep in mind, and now it is become advisable more not to go for annual maintenance contracts, go for monthly or quarterly contracts. Sometime else we will discuss this in detail. Now coming to on the direction of third person, this third person is used in the law for the first buyer. Let me understand it for simplicity. The person who is first buying these goods is considered as the third person for the law. So on the direction of third person, that means the first buyer, on his direction, if goods is delivered to somebody else, then when goods is received by the third person, person for whom this goods has been directed will be considered as goods or services received by the buyer. Let me understand with an example. Say receipt of goods, when movement of goods is taking place on the direction of third party. Third party, again I want to remind here, the first buyer. Let me take the example, one supplier in Bihar named as A agreed to sell certain product to Mr. B in West Bengal, and supply of goods taken place. Goods has not moved, only invoice has been raised by Mr. A from Bihar to Mr. B in West Bengal. In turn, Mr. B raised another invoice on Mr. C who is in Assam, and supply of goods now taken place between B and C. And B now ordered Mr. A to deliver these goods to Mr. C, and goods is now directly moving from Bihar to Assam on the direction of Mr. B, who is considered in the law as third party. Friends, law says the date of receipt by C will be considered B, and Mr. B will become eligible to take the credit of this movement of goods only and only when Mr. C received this material. So this we understand from this example. Now moving toward the section 16(2)(c). No registered person shall be entitled to take credit of any input tax in respect of any supply subject to the provision of section 41 and section 43. The tax charge in respect of such supply is actually paid to the government unless until the person who have charged the tax has deposited it in case or through then using of send-weight credit, rather input tax credit I should use. Sometime I go back to the old provisions of law, that is send-weight credit, but please understand I am talking about input tax credit in GST only. So it is allowed as a credit to the buyer only and only if seller has paid the tax either by way of utilization of input tax credit or through cash, whatever mode he want to adopt. So unless until he pays it, credit will not be allowed to the buyer. Now another condition to is the subsection D, rather I should say clause D, which say he must furnish the return as required under section 39. Unless until he furnish the return, credit will not be come to you. So these all conditions I am discussing. Friends, at the end of this particular chapter, I will tell you all the condition in one slide only, and nothing to worry, not required to note it down. All these slides are available on the portal. You can download it, and anyway we are showing it concurrently also to you. Now coming to the one important provision, and this is always cause of concern for me, because many persons are not applying these provisions, and this is a very harsh provision. Believe me, if you are not complying with this provision, nobody can save you, because GST provisions are self-assessed tax provisions. If any mistake done by you, you cannot take shelter that I was not knowing this, because you must know all provision of law and must comply all provision of law sacrosanctly. So what it says, provided that where a recipient fails to pay the supplier of goods or services other than the supplies in reverse charge, the amount toward the value of supply along with tax payable thereon within a period of 180 days from the date of issue of invoice. I want to stress here, from the date of issue of invoice by the supplier. So friends, if you have taken credit and you have not made payment within 180 days, then this provision will get clicked, and what will happen to you? You will be liable to pay input tax credit availed by you along with interest thereon. Along with interest thereon. And friends, so you are, after 180 days, you have to reverse the credit along with the interest. So keep in mind, this you have to do suo moto. Friends, but one good news is here, whenever you will pay the supplier, you will entitled to get the credit again. And another good news attached to this, that section 16.4 will not apply to this re-availment of credit. I once again want to remind all of you that 16.4 talks about the restriction on taking the credit up to the September month return or filing of annual return, whichever is earlier. So this provision will not be affect the re-entitlement of credit. So we must comply these provisions. Friends, this is another condition attached to it. Seller has to pay the tax and file the return, then only the buyer will get the credit. So this we always keep in mind. Unless until this is established or this has been done, credit will not be availed. Now friends, coming to this restriction of ITC rules. ITC, restriction on ITC, that is rule 36.4. I believe all you are aware, because this is top of the town. Everybody was discussing how to comply with this provision, how harsh this provision are, why government is becoming so strict. Friends, you must have seen the collection has gone up since this condition has been applied. Government has reached the target only applying after section 36.4, rule 36.4. Anyway, let's discuss the provisions. What are the provisions there? This is 20%. Friends, this 20% was applicable up to December. Now it is not 20%. It is now reduced to 10%. So let me read the entire provision so you will get the feel. Input tax credit to be availed by the registered person in respect of invoice or debit notes, the detail of which has not been uploaded by the supplier under subsection 1 of section 37 shall not exceed 10% of the eligible credit available in respect of invoices or debit notes, the details of which has not been uploaded by the supplier under subsection 1 of section 37. Friends, this 10% condition is now applicable from 1st January 2020. We must keep in mind whenever we are taking credits. So let me discuss this provision little bit in detail, because if I am not discussing section Rule 36(4), then I am not doing the justice to the input tax credit topic. Friends, few entries are not coming in 2As. So this condition will not apply for those entries. What are those entries? That IGST paid on imports, because we are bill of entry, through bill of entry we are paying taxes and we are eligible to take the credit in full in respect of IGST, because we are ourselves discharging this tax. So all the valid documents are with us. Document issued under RCM, rather I should say taxes discharged by me in reverse charge, I am eligible to take credit, full credit of that on the basis of payment made by me. So it will not come under 2A for me, and credit received from ISD. So in these three type of scenarios or some other scenarios of similar kind where I am eligible to take full ITC in respect of invoices which is even not coming in 2A. So detail of which has been uploaded by the supplier as on due date of filing of returns. This is also very important in form GSTR 1. Now friends, so many persons are now asking, this GSTR 1 is a dynamic return form. The form 2A which is getting generated from filing of GSTR 1 is a dynamic one. Every moment it is changing. Whenever somebody is giving your GST and filing their GSTR 1, it is getting reflected in your GSTR 2A. But government says you are eligible to take credit of only invoices which has been uploaded within the due date of filing of returns. That is, return here is GSTR 1. So now people are saying, yesterday I have seen it was 20,000, now it is increased to 22,000, and day after tomorrow it might be increased to 25,000. But law says, and friends, now everything is in computer. No, anybody can find out any point of time what was there at what particular point of time. So be careful. Be careful, I am warning all of you. So law says, due date of filing of return, whatever GSTR 1 has been filed, you can take credit on only of those invoices which are coming in 2A on the due date. Now let me present it how it will work. Then we will have some examples also. Because this 36(4) is very important, we cannot ignore this. So first and foremost, have all the invoices furnished in 2A, whatever inputs you are having, input tax you want to take credit, if all the invoices coming in it, in your 2A, yes, then avail the credit, no issue with you. This 36 will not impact you. Now another type of situation, suppose all the invoices are not coming in 2A, then credit for invoice not furnished by the supplier is less than 10%, invoice is furnished by the supplier, yes, it is less than 10%. I am discussing provision from 1st January 2020. If it is less than 10%, you can take the credit, no issue with the issue. Now moving to the third type of situation, it is not less than 10%, it is more than 10%. Then law says, avail credit of invoice in 2A. Means, we will give you an example also. Whatever figure is coming in 2A, add up by 10% of figure coming in 2A, then take the credit of that amount only. We have three situations. First situations, invoice coming in 2A, 10 lakh rupees. Although I am eligible for 10%, but I cannot go beyond the actual credit which is coming to me. So 10 lakh I can take. Second type of situation, 9,50,000 is coming in 2A. 10% of that is 95,000. Means it is less than 10% of coming in 2A, which is not coming in 2A. So I can take credit of 10 lakh rupees. In third type of situation, only 8 lakh coming in 2A. Then I am eligible for 10% above 8 lakh. So I will get the credit of 8,80,000 only. Friends, so to understand it easily, at least 83% of your total eligible credit must come in your GSTR 2A, then only you are eligible to take full credit. If it is less than 83% in any circumstances, then you have to take less credit. Friends, now let me discuss this third situation only. What will happen to you in the next month? What will happen to you in this next month when you are going to file this GSTR? When you are going to file, when you are going to take credit in the next month, because let me take the example where when you got the credit in 2A is only 8 lakh, you have taken credit of 8,80,000 only, whereas you are eligible to take credit, your eligible credit I should say is 10 lakh. So 1,20,000 is sort of you. So in the next month, you are again apply the same formula, whatever credit you have taken, beyond that you will take the credit. Say another 1 lakh rupees is coming in your 2A, so it will become 9 lakh, 10% of that 90,000, so you are eligible for 9,90,000. You have already taken 8,80,000, so 1,10,000 you can take. So in this system, this 83% I used for 20% formula when it was 20%. Now it is reduced to 10%. So it will not be 18%, 83%. It is now somewhere 91%. So you understand this? So you are eligible to take the credit on this system as per 2A only. Now one good news for this GST COVID-19 impact, restriction of ITC 36 is also postponed. Now government is saying for the month of February, March, April, May, June, July and August, you are not required to comply with the rule 36.4. You are not have to take worry of this rule 36.4. But mind it, it will apply cumulatively in September month GSTR 3B. So for this entire period, you have to check your 2A, and whatever coming in 2A, you can go maximum 10% extra in your GSTR 3B, and this cumulative condition will be there. Friends, I have complied. I have talked about this screen also. I have tried to comply all eligibility and eligibility criteria and conditions in this one slide, and hope it will be helpful to all of you. So be attentive to this. What we have discussed, or few things which you have not discussed, but in the law is all part of this, must be used by him. As per section 16.1, eligibility condition is that input goods or services or both for which you want to take input tax credit must be used by him. This is first and foremost conditions. Another conditions, you must be in possession of valid document on the basis of which you want to take the credit. And third, which we have discussed, contained all prescribed particulars. This was mentioned in the law, but relaxation is also given by way of proviso. Basic informations, if available in the invoice, you can still take the credit. But it must contain the basic informations which we discussed. Taxes actually paid by the supplier. This is as per section 41 or 43A. And uploaded the returns for the supply he has made. Now coming to the next condition, that is receive the goods or services before taking the credit, which we have discussed. If it is coming in lots, must on receiving the last lots, and if it is received by third party, let me confess, not third party, the person on the direction of third party or agent of third party, then also we can take the credit. Payment to be to the supplier within 180 days. We have discussed in detail. If it is not made within 180 days, we have to reverse the credit. Reverse the credit along with interest. Not only reverse, simple reversal. We must reverse the credit along with interest. And we are eligible for recredit, and section 16(4) will not hit when we will go for recredit. Now coming to the next condition. In case of capital goods. In case of capital goods, depreciation should not have been claimed on the component of taxes. Not saying that no depreciation has been claimed on the capital goods. It is saying on the component of tax, no depreciation has been claimed to take the credit of that tax portion. September month return or annual return, that is due date of taking the credit. Means up to this particular date you can take the credit for any financial year, that is September month of the next year, or annual return for the year for which you want to take the credit. Friends, for the information of all of you, for the year 17-18 being the first year, government has relaxed this condition for 6 months. They have allowed to take credit up to the March 2019 return. Credit up to the March 2018 can be availed up to March 2019 return. But for 18-19, no relaxation has been given and period is now over. That is up to September month return, that is over on 20th of October. Next condition. If taxes has been paid pursuant to an order, then you are not eligible to take the credit. Friends, this restriction is there. You can't help it. If somebody is found evading the tax and government has collected this tax pursuant to an order, then credit will not be allowed. And last, not the last, we can say, last in the slide is credit should not exceed 10% as per rule 36(4). So these are cumulative conditions. You have to comply all these conditions, then only you can take the credit. So we must understand the eligibility and condition for ITC. Friends, I try to compile this rule 36(4) in pictorial format. Hope it will make you understand the provision if you have not understood by the time, and it is little bit interesting also. I have taken example of a professional only. Professionals who is receiving the inward supplies. What are the inward supplies he is receiving? He is purchased few stationeries, papers and received the invoice. So, being a professional, he must maintain inward supply register. He made the entry for this invoice in his inward supply register. Second type of purchase he has done, purchased a computer and received the invoice for that also, and he has made the entry in his inward supply register. Now, he has also get the telephone services. The invoice value is little bit high in our example. So, but this telephone services, or we can include the internet supplies or number of connections are involved. But telephone services also received by him and invoice. So he made the entry. Now he ordered some food also, and that is also part of his inward supply register. So these are the inward supply of a professional, that is 9,110 is the total taxes he has procured in a particular month. Now moving to the outward supplies, being a professional, he has issued invoice to client A, he has issued invoice to client B amounting to 30,000, another invoice issued by him to the client C, and last is the client D. So he has invoiced to his client, that is number total 4. So value of all invoices are 80,000, and total tax which is collected by him, or we can say he is liable to pay, is 14,400. Now GSTR 1, professional submitting his GSTR 1, no issue. That should match with 3B. Similarly, the person who is selling paper also making entry in their GSTR 1. Computer persons also, the person who is selling food is also made their GSTR 1. But friends, this gentleman supplying the telephone services had not submitted the GSTR 1. So, at the period end, this professional got his GSTR 2A, which looks like this. And whereas his inward supply register is saying something that let me match, it is there. So, what is missing is the entry in respect of telephone connections. Now coming to taking credit. Before filing this GSTR 3B, his output tax liability he had to mention there, his input tax liability is there, but this 3,600 is not coming in 2A. So we have to understand how much he can take the credit. I hope all our viewers by the time must have calculated what is the credit amount eligible to him. All you done? So let me move ahead. Friends, his output tax liability which we have seen is 14,400, and we have calculated that he is eligible to take credit of 6,006 rupees only. First invoice of papers, he is eligible to take credit and it is coming into a. His computer, eligible to take credit, coming into a. His telephone, he is eligible to take credit but not coming into a. So he have to postpone this liability. And third invoice, which is coming into a, but being food supply, not eligible for credit, so we have ignored it. So total credit, eligible credit in 2A is 5,460. 10% of above is 546. So ITC to be availed is 6,006 rupees only. Rest he has to pay in case. So he have to deposit the money, then only he will able to file the GSTR 3B. I hope it made clear to all of you. Now moving to the utilization of credit. Friends, section 49A, sorry, I have missed it. Section 49A says that you can take the credit, you can utilize the credit, because we have three buckets of credit. By the time we must understand, one is the central tax credit, second is the state tax credit, and third one is the IGST credit. So, this section 49A says only after input tax credit available on account of integrated tax. Friends, let me tell all of you, this word integrated tax, central tax, state tax, union tax used in the law. But we are so used to substitute these words IGST, CGST, SGST or UTGST. So it is actually integrated tax has first been utilized fully towards such payments. So if you have something lying in your IGST ledger, then you will not allow to adjust your CGST or SGST credit. You can use only after that. Let me tell you, first be utilized order of utilization that is prescribed in Rule 88. Input tax credit on account of integrated tax first be utilized towards the payment of integrated tax. IGST first to be used for IGST, and amount remaining, if any, may be utilized for payment of CGST or SGST in any order. So now there is no restriction Earlier there was a restriction before introduction of Rule 88A that you have to use IGST with the CGST first, then you can go to SGST. Now this condition has been removed for the reason that few persons were become liable to pay SGST, whereas they were having credit in their bucket, but they have to pay the in case. So to remove these difficulties, government now allowing you to adjust the credit in any order, provided that input tax credit shall be utilized toward the payment of IGST, CGST, SGST only after input credit availed on account of IGST has first been utilized fully. So I hope you have all understood. I have a pictorial diagram for this also. Hope it will make the things clear to all of you. As I mentioned, we have three buckets of credit. This is the first bucket, that is input tax credit on IGST. How we can use? First we will use it for liability of IGST. Something we have used because our liability for IGST has been complied with. Then we can go for CGST, something we paid for CGST, something we decided to pay for SGST. This is per our switch wheel. We can add how much we want to use for SGST, how much we want to use for SGST. But we have to ensure that our IGST bucket should be empty before we move to any other bucket. So input tax credit of CGST, you have to use it first for CGST. Whatever balance remains, you can use for IGST. I hope it is getting clear now. Now moving to the third bucket. First we have to use it for SGST. If SGST liability is over, then only we can use for IGST. So this is the way in which we should utilize our input tax credit, and this we have to follow. If we are not following it, we may become liable for some notice or some explanations. So every viewer, I wish all of you should are following. You must be following these conditions whenever you are going to take the credits. Now, this another chapter in input tax credit, that is block credit. And friends, this block credit is really blocking the credit. And friends, believe me, the drafting of block credit provisions, that is section 17.5, is little bit complicated. Sometimes make us confused whether this credit we are eligible or not. And believe me, as I told you earlier, that this is self-assessed tax compliance. We have to do it our own. We have to do it correct. We have to do as per the law. So there are total 11 clauses to this rule, section 17.5, starting with section 17.5A. Friends, this has been got amended from 1st February 2019. We must understand it, what exactly it is. It is in relation to motor vehicles. I am not discussing here today the earlier provision of law which was there prior to 1st February 2019. Input tax credit shall not be available in respect of following, namely the motor vehicle for transportation of persons. The word used here, transportation of person having approved seating capacity not more than 13 persons including the driver. So not more than 13 persons. So up to 13 persons. Motor vehicle for transport of person having approved capacity not more than 13 persons. Means up to 13 persons including driver, no credit is allowed. But there are some relaxations. this further supply of such motor vehicle. If a person who is dealing in motor vehicle only, he is allowed to take the credit, or he is in transportation of passengers, then he is allowed to take the credit, or imparting training on driving such as motor vehicles. So friends, in these three type of situations, this credit is available. Otherwise, for the passenger vehicle, or I can say transportation of passenger, any vehicle is used having capacity up to 13 is not allowed to take credit. Beyond that, definitely we are allowed to take the credit. Friends, people have objections, and there are some anomaly also. In the first line of this section, they have used the word transportation of persons, whereas in clause B, they have used the transportation of passengers. So why they have used two different terminology, it is not very clear, but they have used two terminology, we must keep in mind. Now, this is newly inserted clause, that is clause AA. Input tax credit shall not be available in respect of vessels or aircraft when they are used for making, except when they are used for making further supplies of aircraft vessels, transportation of passengers, imparting training on navigations of vessels, or flying of aircraft, or for transportation of goods. Friends, if it is used for this 5 type of situations, then only we are eligible to take the credit. Otherwise, we are not eligible to take the credit of vessels and aircraft. Now moving to the next. And before moving to the next, I must want to remind about section 17(5)(a), which was drafted earlier, mentioning that motor vehicle or other conveyance, in respect of motor vehicles or other conveyance, people were having confusion whether the credit in respect of vehicle itself is not allowed, or in relation to also not allowed. In respect of word has been examined by the judiciary number of times, and they are of the view that of the or on the. So, to our understanding, it was restricted to the vehicle itself, not the services which we are going to take for the services. So, with this background, now coming to the section 17(5)(ab). So, what section 17(5)(ab) talks about? Services of general insurance, servicing, repair and maintenance, in so far as they relate to motor vehicle, vessels and aircraft, referred to in clause A or clause AA, will not be allowed, provided where they are in relation to particular vehicle or vessel or aircraft for which credit is allowed. So friends, from 1st February 2019, it is ample clear, and we can say now credit of these services are not allowed. Now a very valid questions and very pertinent things which is coming to my mind must be coming to your mind also, and you must understand this also. Section 17(5)(ab) talks about services only. I believe everybody have noticed that, because I highlighted it in red. It is not restricting for goods. Believe me, if you have purchased pair of tires to be replaced in your car, whether credit will be allowed to you or not. Because after insertion of new clause, government has accepted that it was not covered earlier. We must accept that, and after new insertion, it should be considered as it is covered from the date it was inserted. It is inserted from 1st February 2019. So friends, they have restricted the services only. Now I want to take all of you to the repair and maintenance services. So it should be read at services of general insurance, services of servicing, and services of repair and maintenance. Friends, government has clarified a service center, a motor vehicle service center, if they wish to do so, they can sell the spare parts separately and charge the GST which is applicable on those spare parts. And for using those spare parts, they may charge services separately and apply the HSN code or SSC code of service for that particular item. And they can bifurcate their invoices wherever possible, feasible in this way. So if you go by that, and if you understand correctly that whatever goods mentioned in our service invoice, whatever items mentioned in our service invoice, we are eligible to take the credit for the goods, although services are only restricted by this section 17(5)(ab). This is the only intention, believe me, of the government to allow the credit of goods, not credit of services, because in building also you will see, we will discuss it, they are not allowing credit of construction of buildings, but they are allowing repair and maintenance services in case of buildings also. So same analogy might have been applied here, or considering that this credit is restricted to services only. Now moving to the next item, that is section 17(5)(b), that is input tax credit shall not be available in respect of the following, namely the following supply of goods or services or both: food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicle, vessels or aircraft. Friends, so these services are restricting the credit for the purpose of credit. So we must apply these provisions as it is. So they restrict food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessels or aircraft, except when they are used for the purpose specified therein. Life insurance and health insurance. So I believe all we understood this. Now coming to the provisions, and this is very important provisions of law, believe me, provided that, I want to draw attention to all of you, provided that input tax credit in respect of such goods or services or both shall be available when an inward supply of such goods or services or both is used by a registered person for making an outward taxable supply of same category of goods or services. When making an outward taxable supplies of same category of goods or services or both, or as an element of a taxable composite or mixed supply. Friends, it is very important to understand this. Let me take the example, our Institute of Chartered Accountant organizing number of conferences. And for organizing each conferences, they are charging some registration fees and members are paying that. And in this conference, you will see that now food arrangement is also made, caterer is coming there. Now question arises, where this outdoor caterer, which is coming to the Institute of Chartered Accountant, providing services, of serving the food to the delegates in a conference, whether we are eligible to take the credit. I hope question must be coming to all of your mind. Friends, if you apply the last line, as an element of taxable composite or mixed supply, in a conference, registration fees, and it is naturally bundled. Whenever people are going for full day conference, they are getting food, and it is considered as naturally bundled, and so it is a composite supply. So the person who is supplying a service, a composite supply using certain of these services, part of the bundle, then they are eligible to take the credit. So applying this principle, you can take the credit in some of the situations, although it is not coming in simple reading of the provision of law. Now moving to the next, we have other part of this 17.5b. Point 2 says membership of a club, health or fitness center. Friends, it is categorically mentioned membership of club, health or fitness center. Even if you are a artist, you require these services for your profession, still it is not allowed. But friends, membership of a trade body or a professional body is not covered here. It is only club, health or fitness center. So we can take credit of associations which are in the nature of trade bodies or which are in the nature of professional bodies. Then you can take, but it should not be in the nature of club, health or fitness center. Travel benefit extended to employee on vacation, such as leave or home travel concession. Provided that input tax credit in respect of such goods, services or both shall be availed where it is obligatory for an employer to provide its employee under a law for the time being enforced. When it is part of the employment, then we are still allowed to take the credit. Now coming to the section 17.5c, that is works contract service when supplied for construction of immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. All we understand, works contract services for construction of immovable property is not allowed. So we should not go and take the credit for this other than the foundations of the plant and machinery. Even factory side is not allowed, but foundation of the plant and machinery is allowed. So this entry restricts the credit of works contract service when supplied for construction of immovable property. Now moving to the entry number 4D, that is entry number D, goods or services or both received by a taxable person for construction of an immovable property. Here also exclusion for plant and machinery is there on his own account, including when such goods or services or both are used in the course of furtherance of business. So even if you are constructing a building for your own purpose or when for the use of business, or no credit will be allowed for goods or services. So both things are restricted here. No goods credit, no service credit, or no credit of both the item will be available to you. This is blocked by provision of section 17.5D. 17.5E, this provision is there, but I always fail to understand why this provision is there. Anybody? Friends, if you go to section 7.10, we all aware this section 10 itself restricts the person who is issuing an invoice for the supplies of goods or service. Composition dealers is covered under section 10. So they restricting the taxes paid has been paid under section 10 that will not be allowed as a credit. So this is blocked there, but no purpose of that. If somebody is procuring material, somebody is buying something from a person who is covered under section 10, then he is not supposed to charge any tax. But this provision is there, we always keep in mind. Similarly, goods or services are both received by a non-resident taxable person except on goods imported by him, he is not allowed to take the credit. Goods or services are both used for personal consumptions. Suppose you have purchased a dozen of pen for your office, but your considered as personal consumption, so no credit will be available to you on those 5 pens or anything which is used for personal consumption. Credit will not be allowed you. It is restricted under section 17(5)(g). Now very interesting, section 17(5)(h), goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. First and foremost, let me tell you, people are understanding how government will check this, how government will find out how much is stolen, destroyed, written off. Friends, you have to prepare your stock register. You have to say where your goods are moving. This is your liability, because I want to remind all of you, you always keep in mind this is GST as well as tax. This is your responsibility to comply the tax as per the provision of law. Now, goods lost, definitely no credit, stolen, destroyed. Sometimes there is a loss on the ground, on the occasion of conversion. If you are converting something into something, there will be no normal business loss. It is bound to happen. Or after 10 days you want to weigh them, you will find that it is not 500 kg. It is something less, because this will moisture will get dried up. So these all conditions are there. Those are the not the things which is business loss or normal business wear and tear. These words are stolen, destroyed, or given by way of gift or free samples, New Year gifts, free samples by pharmaceutical companies. All these are not allowed, believe me. But at the same time, this is your responsibility to declare this, that you have reversed the credit on this. Any tax paid in accordance with the provision of section 74, 129 and 30. Any taxes by way of seizure of vehicle in transit, all this done, then no credit will be allowed to you. You have to reverse the credit. These are considered as block credit. So these all are the items in the block credit, and hope you will take care of this list whenever you are going to take the credit. Unless until you take care of this list, you may face problem. That is apportionment of credit. Now friends, we have covered section 17(5) only. Now rest of the section of section 17, that is section 1, 2, 3 and 4, these are basically talking about the apportionment of credit. Let me move and discuss those provisions. After that, time permitting, I will discuss something related to input tax credit only, but changes took place in the recent period only. Section 17(1) talks about when goods are used, goods or services are used for business purpose, then we are eligible for input tax credit. When goods or services are used for other purposes, then we are not eligible for credit. So we have to bifurcate it. Rather, one have to keep three, not a bucket, have to keep 3 buckets for the credits. How these buckets should be named? First bucket is the goods or services is fully used for business purposes. You are entitled to full credit of this. Second bucket, goods or services are fully used for other purposes. You are not entitled to take credit of this at all. Then no credit to be taken on this. And third bucket is the common credit, which is used for both the purposes, taxable as well as non-taxable purposes, means for the business purpose and for other purposes. If it is used for both the purposes, then this section 17(1) get hits and you have to reverse the credit. We will talk it later on. Rules has been prescribed for this. We will discuss. ITC on the basis of uses. Input tax credit is partly used for taxable supplies, partly used for zero rated supplies. Both these are allowed and to be considered as taxable supplies, and ITC is fully available. But if it is used for non-taxable supplies or it is used for exempt supplies, rather it is used for nil rated supplies, then no credit is available to you. You have to reverse the credit. Similarly here, as we discussed in section 17(1), we have to keep the three buckets. Fully for the taxable or zero rated supplies, full credit. Non-taxable, exempt or nil rated supplies, no credit. Common credit, we have to bifurcate it. We have to apply the formula and take the credit. Friends, the value of exempt supply shall be such as may be prescribed. Supply on which the recipient is liable to pay tax is considered as supply on which the recipient is liable to pay tax is considered as exempt supply. Friends, I am a person who is into a profession. In that profession, I have supplies on which I am liable to pay tax under forward charge. At the same time, I have supplied services to few of my clients. They are covered under reverse charge. This is an hypothetical situation I am discussing. I am not going into the legality, taxability of the service. Few of the services provided by me is under reverse charge. And friends, for me, these services on which the recipient will pay the tax will be considered as exempt supply. I have to reverse credit if it is some credit is attributable to this exempt supply only. Then I have to reverse the credit on this exempt supply. Friends, and I am not find any logic to this. This will only increase cost of my supply. It is nothing else, because whatever inputs I have used for providing these supplies also, on which the recipient will pay the tax, I have used certain inputs. And if I am not allowed to take credit of these inputs, I am going to add this cost into my pricing only. So it will increase the price. At the same time, government is collecting the taxes on this supply under reverse charge, denying me the credit of that. It is a cascading effect, nothing else. But this provision is there. We always keep in mind, wherever we have done some supplies on which the recipient is liable to pay tax. Now wondering type of services this may be. Friends, simple example of this. Let me again go back to the Institute of Chartered Accountant only. Organizing a conference. Not coming to you, remind what was just. Friends, that is a sponsorship service. Somebody is sponsoring that event. Sponsorship service is under reverse charge. Institute of Chartered Accountant not liable to pay tax on sponsorship service. Sponsorship. But delegation fees, whatever they have collected, they are liable to pay tax on that under forward charge. So they have to reverse the credit on the supplies made to the sponsor, they are liable to reverse the credit. Now let's move ahead. Transaction in securities, supply and sale of building, subject to clause B of paragraph 5 of schedule 2. All we know about this: under construction buildings, apart from value of this item will be considered as exempt supply. Value of this will be considered as exempt supply, and if we are in the business of providing taxable and non-taxable supplies, then we are supposed to reverse the some portion of the credit. We will touch upon that. But now before moving to the next section, that is section 17.4, let me tell you, government by way of explanation have explained that this explanation you will find after rule 45. This explanation is not given just after the sections. It is coming by way of rules only, not provided in the act, or no specific section for this. It is not provided after rule 42 or 43. Rule 42 and 43 talks about the reversal of credit. It is provided after rule 45A, which says for determination of value of an exempt supply as referred in subsection 3 of section 17, the value of land and building shall be taken as the same as adopted for the purpose of paying stamp duty. So friends, if you are a chartered accountant and you are providing professional services which are liable for GST, at the same time during the year you have sold certain land or building, then this will be considered as exempt supply and you will be liable for reversal. You will be liable for reversal, and reversal will be hit by rule 42, 43, and value of this land and building as adopted for stamp duty will be considered as value of exempt supply by you. Value will be considered as exempt supply by you. And friends, only relaxation is available to you. Only things which you can take care while doing so, that you bifurcate your credit into 3 buckets, which is directly used for your profession, which is directly used for this land and building, and for common credit you have to reverse certain portion, and value may be higher than your professional services. A land may be sold for a higher price, a building may be sold at a higher price than your entire collection in a year, but it has to be there. Next they have said value of securities shall be taken as 1% of the sale value of such securities. Whenever you are selling securities, then sale value of the securities to be considered, and 1% of that will be considered as exempt supplies. Friends, although security sale purchases are considered here, but some sort of transactions are also there. These hedging transactions, I am not much into this share market. I am not much known about all this. I never done it, thanks God, or maybe not so intelligent to be there. But if I am selling securities, 1% of the value will be considered as exempt supply. But if I am doing it into forward contract, some hedging contracts, and so many types of contracts are there in share market, I don't know how to value those transactions. Government has not prescribed any mechanism for that. Hope something to be done for that. Banking and non-banking financial companies covered under section 17.4, they can avail every month an amount calculated as above. As above means we have discussed in section 17.1 or 17.2 and 17.3. Complying all this, if you want to calculate your tax liabilities and want to calculate your input tax credit and discharge your tax liability applying section 17.1 to 3, no objection to that. But if you find yourself not capable to comply with these provisions, then section 17.4 covers you and you are eligible for 50% input tax credit. You can take 50% of the credit on inputs, capital goods and input services, and rest 50% will lapse. It is not that 50% you can carry forward. Every month you have to apply this, and 50% is eligible as a credit and 50% will lapse every month. But you have to take care, once you have exercised this option, you have to do it for the entire financial year. Change of this option is not available to you during the financial year. And one more relaxations in this provision of law is that if you are having number of registrations in the country or in a state, then you can apply these provisions for particular registration, that is GST, not necessarily one of banking company have to comply with this provision, have to apply this provision for the entire country. They can go by GST wise also. Friends, this ITC reversal which we have discussed so far is required to be done as per 17.1, 17.2.3 or 17.4 in sometimes. Then input and input service to be reversed as per Rule 42. Friends, believe me, if you are having single rupees exempt supply or non-taxable supplies, then you are supposed to apply this Rule 42 and 43. 42 is input and input services and 43 is about the capital goods. The input ITC in respect of input and input service, which attracts the provision of section 17.1 and 2, being partly used for the purpose of business and partly for other purposes, or partly used for affecting taxable supplies including zero-rated supplies and partly affecting for exempt supply, shall be attributed to the purposes of business or for affecting taxable supplies in the following. A large formula has been prescribed. It will take at least 20-25 minutes, and if you do your own, maybe take it 1 hour to explain that formula. So I have not covered here, but anybody hit by this provision must go to Rule 42, comply with it. All are basically simple calculation, arithmetical calculation. You have to reverse the credit for every month, and at the year end you have to do for the entire year also, based on the month's turnover. Whatever turnover you are having in taxable and non-taxable kitty, you have to bifurcate your input and input services. But one provision is there that always draw my attention, that is, whenever you have input and input services to be reversed as per Rule 42, you have to consider 5% of this common credit as for personal use. This is a unique feature of this Rule 42. Whatever common credit you have in your kitty, 5% of that will be considered as personal use, and you have to reverse that 5%. Few people are saying it is optional, few are saying it not mandatory, but to my understanding, Rule 42 do not give you leeway, do not allow you options. You have to reverse 5% of this considering personal use. Then you have to bifurcate the balance into the taxable and non-taxable kitty. Similarly, for capital goods, you have to reverse the credit, but no personal use formula has been applied here. But here, believe me, this 42 rule is little bit easy to comply with. 43 is much difficult one. Why I am using this word much difficult one? Because every assets, mind it, every assets have a useful life of 5 years. Over the period of 5 years, you have to do the reversals along with interest. For each assets, you have to calculate separately. So that's why I am considering it a little bit difficult. Now, recently government has modified this Rule 43 to make it more easily understandable by all. I believe after this it becomes little bit simpler. How much simpler it may be, but you have to reverse the credit, you have to do the calculation for each taxable period, and for each taxable period you have to reverse the credit. You have to do something. My friends, this Rule 42 and 43 you must understand, must apply if you have single rupees as exempt supply, non-taxable supply, or zero rated. It's not zero rated, nil rated supplies. So now this much we covered. We are touching times which is permitted for discussions also. So let me quickly touch upon 3-4 points which is I have compiled. This transfer of business, whenever there is a transfer of business, we can also transfer the ITC, that is business reorganization. Recently a circular has been issued saying that this in case of business reorganization, we can transfer the input tax credit. I am not going to discuss each and every item. This circular was issued on 23rd March only, so you can refer it. I believe it is numbered as 133 by 03/2020. Not correctly remembering, but it is within 131 to 134 only. Please refer that. This circular is basically saying that input tax credit can be distributed to the new unit as per your sweet will. How much IGST, how much CGST, how much SGST you have to transfer. You can transfer whatever figure you want, but the cap is on total figure on the value of assets. If suppose your organization is having 100 crore assets, you are transferring 40 crore assets, then you can transfer 40% of your credits. But bucket you can choose any of this, whatever credit available in your buckets, you can use any of this and transfer the closing balance of your input tax credit. 40% of this you have to transfer. This usually takes place in sale, merger, amalgamation and all this. These are 5-6 examples, issues they have clarified in the circular. Now coming to the other points which I want to discuss. Now coming to the topic which I think everybody will have a concern over, that is section 50 subsection 1 of CGST Act 2017. Interest for delay payment of GST. Friends, the wording itself is confusing. The interest on delay payment of GST. But delay payment is what? Whatever we paid, that is only delayed. But credit can be considered as delay payment. Never be. But it was there. Some of the persons have understood section 51 like this and issued notices. I am aware that few bank account even attached for not paying interest on this utilization of input tax credit. Friends, this input tax credit anyway lying with the government. We are not having this control over that. That is now used by me. I'm not taking credit for the which is coming subsequent to me. I'm taking credit only which is accrued to me in this particular month only. Why should charge interest on that? Government in GST Council, they have decided in the past also, amended the law. Believe me, they have amended the law also. Section 51 got amended, but it is not notified. Anyway, now they have accepted it that they will do it retrospectively. Once again, retrospectively from 1st July 2017. Very welcome step. But now they must issue a guidelines to all the officers. Whatever notices they have issued, they should withdraw. Because we all know amendment of law will take longer time, and after that notification of that will take further time. Friends, are you aware how many SGST acts we have? We have 31 SGST acts, 28 states and 3 union territories. Each state has to pass this law, then only it can be notified. Government says sometime, but whenever they want to do something favorable to the government, they do it by ordinance also. I don't know whether how many of you are aware, when on 1st July 2017, GST was introduced in our country, number of states done this SGST Act by ordinance on 30th June 2017. Not to go into much into detail, but a welcome step. Hope soon will be complied. No notices on this. Whatever collection has been done on this to be repaid to the SSC. Anyway, they are facing hardship due to the working capital requirement. Now I am getting signals from the head office. Before that, let me discuss this last topic, that is corporate insolvency professional resolution process. I think that all you are aware about this input tax credits, corporate insolvency resolution process, how it is impacted. Friends, let me tell you, as per the Insolvency Bankruptcy Code, this government department is also considered as trade debtors. They have to file their claim before the NCLT. Then only they can ask for the taxes which is due on the date of this resolution process is started. Any cases which is pending before the SSC got under the monitoring period. So now government come out with a solution for them that the day it is started, known as the appointed date, from the appointed date to the registration date, all these insolvency professionals, that is the IRPs and RPs, have to take registration within 30 days of 21st March 2020. They have to take registration, they have to file first return as per section 40, and whatever transactions they have done during this period, date appointed date and date of registration, they have to declare in their first return. They are allowed to take credit of this post CIRP period, not the pre-period. Any credit which is lying with the organization, if any, will not allowed to be taken by this IRP and RPs. They can take credit only post their period or during their period. They have to declare the entire transactions. They are eligible to take the credit. Section 16.4 and Rule 36.4 will not hit them. They are eligible to full credit. And whatever invoices they have issued, they will also take the credit. Even the old registration number has been mentioned in those invoices, and they are allowed to continue with the insolvency process. Thank you very much. It is time for queries. Let me see how many queries we have received so far. And I think 1 minute or 2 minute time they will take to convert the screen. So thank you very much for having patient listening. Within 1 or 2 months, I will start the answering the queries which is came to us through emails. Members were posting the queries online, which must have been received by us. So friends, I have not spoken anything about the COVID-19. Be safe, stay safe, and thanks the Indirect Tax Committee Chairman allowing all of us to get enriched during this COVID time also. So I am closing this PPT now, ready to take your queries. Anybody who has already raised the queries, it is coming to me. This social distancing to be followed. Be safe, be at home. Now let me take the queries.
Thank you, Chairman Sir, for our immediate past Chairman. You have almost deliberated in detail for about 1 hour 45 minutes. I request you to drink a glass of.
Is
yes, sir.
Rajan Garg, who asked 2 days before from Noida. There is a private limited company who has built a building fully furnished with furniture, interior, etc. and used the property for renting out. He has got input credit of the building construction, furniture, electrical installations, and infrastructure including genset, etc. it has charged GST on rent. Will the purchase of capital goods be considered in furtherance of business? Be allowed to use GST on input tax credit or rent from the tenant? And friends, very lengthy questions and included everything in the questions. Let me tell you, the restriction is on the works contract, services or goods which is used for construction of the building. That is only restricted. If you buy some furnitures, if you buy some capital goods which is not for the building, which is not become the part of immovable property, which is not becoming part of immovable property, then you are allowed to take the credit. If some capital goods is there, you have purchased a genset, you are eligible to take credit of that genset. No restriction on that. Suppose you have purchased some table, furniture, wardrobes. These are furniture. These are capital goods. You are allowed to take credit of those. No restriction on that. But this immovable property, you are not allowed to take credit. So please do not try to take credit of this immovable property. You are allowed to take credit of capital goods. Definitely. Next question is, what if a machine is used for both office and personal use? How much ITC can be claimed? How to disclose? Very interesting questions. How much credit to be used? Friends, if you are doing something for personal use, how much credit to be reversed? That you have to value it yourself, or if you are not able to value yourself, then this number of hours you have to bifurcate. You have to prepare a logbook, how much it is used for this personal purpose and how much is used for the business. Next is the production house, print media, photographs produced, GST charged 18%. What is the input credit will be available for purchase of food and fees paid to the hairstylist? Hairstylists, they are saying beauty services, that is not covered here. Even it is used by print media. They have not bifurcated it, and it is not considered as part of the service of the composite service or mixed service, so no credit of this will be allowed. Suppose if office furniture and computer are purchased and ITC is claimed at the time of GST audit, maybe after 4 years, if the assets purchased are condemned and disposed of without consideration, how ITC is going to impact? Physical assets will not be available. I think if some assets are disposed of, then useful life of the assets has been considered as 5 years, and you have to reverse 5% for each quarter. So up to what period you have used there, and after that you have to reverse at the rate of 5%. Next question. One of my client is purchased a truck and he is engaged in trading of cents. Whether he is able to take GST credit on trucks, he is or will not be able to charge freight separately in invoice. How the rate of send include transportation rate? Please guide me. If I am not aware, let me confess here whether send is subject to GST or not. If send is subject to GST, definitely he is eligible to take the credit and he can use the credit. He can use the credit while discharging the taxes on send, but if his sends are not taxable, then he is into the exempt supply. No credit can be taken by him. So no option for him. He have to lose this credit. Nothing can be done in this respect. GST ITC on civil cost. from Kochi. Mr. Satish is asking GST, ITC on civil cost, whether we can take credit based on Odisha High Court decision if we are in the business of leasing shops in malls. Friends, you are talking about the Odisha High Court decision. I believe you are talking about the Safari Retreat decision. Safari Retreat decision definitely came in favor of these builders, but that is challenged in Supreme Court. I believe it is still pending in Supreme Court. So until government accept this, because the number of time we have seen, if you go by circular, which is issued on 31st March itself, in number of provisions, government has accepted that. High Court has given so and so decision, so we are accepting that and we are now allowing people to abide by this decision and our provision will be applied according to the decision. But this is not done in this particular case. So you have to wait for the decision of Supreme Court, and if you still want to take the risk, that is up to your call. This is individual person's call, whether he want to continue with the litigation or he want to buy peace of mind. That is subjective decision and depend upon the volume of amount involved in that and situation with the SSCs. Balaji is asking from Hyderabad, sir, can we get input on RCM paid for the financial year in 1920? His question is that he has paid the taxes for the year 2017-18 in the year 2019-20, whether he is eligible to take the credit. Friends, this payment of taxes under reverse charge is allowed as a credit at the time on the basis of payment only, and government has clarified also by web circular says mentioning that if some person has paid taxes under reverse charge in the next financial year, he should take the credit in the next financial year, as because the credit is available only on payment basis. So you can take the credit. Now coming to the next query, that is Sachin is asking from Pune, sir, 180 days payment to supplier. If vendor has raised bill on us, we have taken ITC, but payment is not paid to the vendor within 180 days. In case, can we reverse the ITC? Yes, you have to reverse the ITC. We have discussed, if payment is not made within 180 days from the date of invoice. This we always remember. This 180 days is to be calculated from the date of the invoice, no other condition. So you have to reverse the credit. Not only reverse the credit, you have to pay interest on that. So you have to reverse the credit with interest. If you made the payment if you are making payment in a future date, take the credit on that future date. Section 16(4) will not hit you. Take the emails na. Queries are there. Phone mein aa raha ho. Phone karo na sir. Next query, which is from Kedarnath, Hyderabad. Can we claim RCM paid amount as ITC in the same month? Very valid question, Mr. Kedarnath. And I think you are into this since long. You are a little bit convinced by this service tax provision, or you are worried about the service tax provision. Friends, in service tax, there was understanding that you cannot take the credit in the same month. You can take the credit in the next period only. But in GST it is ample clear and clarified by the government also that the liability discharged under reverse charge method can be taken as credit in the same month. So nothing to worry. Mr. Kedarnath, you can move ahead and take the credit. Mr. Deepak from Calcutta is asking whether RCM paid on transportation of goods can be claimed as input credit after paying. Yes, transportation of goods if it is used for taxable supplies. If you are using this transportation of goods service for some exempt supply, you are not eligible to take the credit. If it is used for some taxable supplies, definitely you are eligible to take the credit and you should take the credit. Umar from Pondicherry is asking, is ITC allowed to be availed on RCM paid through cash by filing DRC 03 at the time of filing of annual return? This DRC 03 is not meant for reverse charge. It is advisable you should declare in your GSTR 3B and GSTR 3B and take the credit in the month of payment. If you paid it through DRC 03, I won't think there is some provision which allow you to take the credit for DRC 03 payments.
Chairman, Sushil ji.
Mr. Rajkumar for Chennai is asking where e-commerce dealer are not passing ITC GST credit by including the buyer GST number. So you have to contact this e-commerce operator. It is not the problem of the taxation. It is the problem of particular person, that this particular e-commerce operator. I don't know what type of credit you are looking from them, and if something is definitely due to you, you can take this. For Sumitra from Thane, dear sir, can tour operator whose output tax is charged at 5% set off against GST paid on foreign payment on reverse charge 18%? I think these tour operators are not allowed to take the credits, so you cannot do this. If you are allowed to take the credit, definitely you can take credit of this also. Mr. Rajan, since I am a trader, can I take credit on less rent on mixing of pen? Lease rental on mixing of pen. Your question is not clear. You are saying you are a trader and you are saying lease rent on mixing of pens. That is not also clear. But if you are a service provider, job worker, definitely you are eligible to take credit of lease rent. If you are a trader even, lease rent is always allowed you as a credit. So you can take the credit of lease rent also. Prachi Gupte from Karjat asking, can we take input tax credit in March month combining for RCM payment in each month for whole of the year? Yes, no restriction on this. For this particular financial year, you can take the credit, but you have to discharge your tax liability every month. That is not the case that you will discharge the tax liability for the entire year in the month of March. You have to discharge the tax liability for every month. If you want to take the credit one at a time, that is in the month of March. No restriction on that unless until last date for taking credit is not gone.
Sushil Goyal, sir.
Vipin Chakravarti from Kolkata is asking whether input GST for the financial year can be claimed now. If no, whether output GST can be reversed. Output GST cannot be claimed now for 17-18. It can be claimed for 18-19 only. It can be claimed up to during the period 18-19 only, that is March 2019 only. After that, no credit is allowed. I don't know what reversal of output you are talking. I have not understood how you can reverse the output. Once you have provided the service, you are liable to pay tax on this. Seema from Thane is asking, exhibition attendant outside India organizing by businessmen, is such case ITC on such expense can be claimed? Yes. Whatever taxes you are paying, GST for India government to be claimed. If GST is for other countries you have paid, no credit is here. It is not clear from your questions. If some Indian organizer charging you GST. But I believe you are talking about the sales made outside India for the exhibitions. It is not used for the business in India. Then how you are not paying GST on that supply? Then it cannot be considered. If it is considered as export sales, then definitely you are eligible to take the input. I think now chairman has joined from us from Chennai, and now over to chairman for concluding. Other queries we will try to answer through emails, or we will have another sessions for answering the query answers. I feel chairman will decide. And over to chairman from Chennai. Thank you very much for listening, and thanks chairman for organizing a wonderful webcast. Thank you very much. I am signing off now. Over to chairman.
Yes, thank you very much, CA Sushil Kumar Goyal ji, our Vice Chairman of the GST and Indirect Taxes Committee. For about 1 hour and 55 minutes, you have been with us deliberating on the various lucid aspects of the input tax credit. In fact, input tax credit is the fulcrum, and you being an expert in this subject, having followed GST for almost now since its inception, you have gained a strong foothold on this subject, I should certainly admit, sir. Sincere thanks to you. You are rendering a yeoman's service to the profession. Daily, you are there in some webcast or the other of the ICAI and its various organs. Sincere thanks to you. Esteemed members, I would like to inform you that today's webcast was viewed by about 9,700 plus viewers, and we had 550 plus questions. Certainly a huge participation, I must admit. Sincere thanks to each and every one of you. Sincere thanks to the Vice Chairman Sushil Ji Goyal and our faculty for the day. Thanks to the office staff of the GST and Indirect Taxes Committee, who is continuously working in spite of the fact they are working from home on Saturdays, Sundays, whether it is day, night or whatever it is, and also our service provider. Yes, I did receive some calls that there are some technical breaks. In fact, friends, you must know that Sushil ji is in Kolkata. I am sitting in Chennai. The webcast service provider is in Noida. So the entire connection is like it's a triangle. So there will certainly be some hiccups here and there. Please bear with us. I am confident that you will certainly understand, and it will be our endeavor to ensure that we continue to provide meaningful and purposeful service in the interest of our members, in the interest of profession, and above all, in the interest of our nation. I submit that the route that has been laid by my seniors, including the current Vice Chairman who is the speaker now, we will certainly follow that. They are guiding us. They are our force, in fact, I should tell, in the committee. Their views, their suggestions, their ideas are a backbone of this committee. Thank you very much. Jai Hind.
Thank you, sir. Thank you very much.